Harsha Upadhyaya, CIO Equity at Kotak AMC, joining us this morning. Harsha, it's been a very decent quarter from an earnings growth perspective. Maybe a slight positive bias, if at all, with regard to the numbers. And on the base that we've seen, Q1, Q2, as well as Q3, Q4 has been surprisingly strong. But it's very often that most of this is discounted, right? What about Q1 FY27? Plenty of headwinds. You believe that maybe some of those could translate to a disproportionate kind of earnings impact in Q1 FY27?
Good morning, Harsh.
Very good morning, sir.
Clearly, as you mentioned, Q4 has been quite resilient as far as the numbers are concerned, which have come out up until now. Of course, most of those results have come from a set of companies which manage their inventory levels or their pipelines quite nicely, even through the crisis. However, there could be a little more disruption when you look at Q1 of financial year 27. So we do expect some disappointments in Q1 FY27. However, if the energy disruption ends before the earnings season starts, then I do not think that markets would really worry about Q1. They will look at it more as an aberration and move on from there and look at how rest of financial year 27 and financial year 28 would pan out. However, if the energy disruption continues, then of course there will be worries on not only Q1 numbers, but people may still also worry about Q2 becoming again a weaker quarter. It all depends on where the energy disruption goes in the next few weeks.
Have markets therefore been resilient in your opinion, and are we exposed to downside risks just given the fact that there is this very large earnings risk which is looming? And also crude, most analysts seem to be suggesting that there could be bigger problems regardless of even if there is a resolution in West Asia, because it takes far longer for some of these supply chains to get ironed out.
Sure. The supply chain may take a few more weeks to normalize once the final resolution is signed. However, I think broadly Indian earnings have remained resilient. We do not see more volatility coming into the market because of the current standoff between US and Iran. However, if this escalates once again, of course, nobody knows. And to that extent, there could be more volatility. If not, I think markets would move broadly sideways and wait for the resolution to happen. And then probably you will see a clear direction from the market. And that's what seems to be happening in the last couple of weeks as well. It's not that there has been a resolution. There has been some volatility in the market, but broadly we have been sideways all through this volatility.
Hi, morning. We ended Q4 on a decent set of growth, not only on revenue, but also on profitability there. But Q1 and Q2, as you said, there will be some impact of the supply shocks which is coming in. So how are you placing your portfolio from sector point of view? Which are the sectors where you are trying to be bullish, and which are the sectors where you're going underweight at this point in time?
Clearly, there have been certain sectors which are not impacted as much as the others in the first stage, I would say. So those are essentially the pockets where we have been positive even before the war started, and we continue to remain invested in some of those segments. For example, banking and financials, hospitals, power sector. These are some of the areas where we do not see immediate impact of the war or any of those disruptions in the energy market. So that's where most of our overweight stance has been across our portfolios.
And how are you looking at some of the recent sectors like where we are seeing an uptick in interest, which is power, green energy? Are you also are you bullish on them from a long-term point of view, or even for that matter, Coal India, where which is linked to energy here?
We've been positive on entire power sector and the value chain, including some of the ancillaries which cater to power sector in one way or the other. However, across the board, I think the stocks have done well. From a short-term perspective, there could be some volatility at some point of time. However, from a medium to long-term perspective, India remains a power-deficient country. And to that extent, I think the entire value chain should do well from a growth perspective. Of course, at every point of time, one needs to review the valuations and then take a call. At this point of time, while we are looking at slightly higher valuations that have come through in the last couple of months, we still believe that this is one of the sectors which has a positive tailwind, and we continue to keep overweight stance in the portfolio. However, it will be more stock specific as you go ahead. Clearly, there have been certain stocks which have run up quite fast, and maybe in some cases ahead of fundamentals as well.
You mentioned financial services as one of your top picks. Within financial services, how are you looking at private sector bank? We're seeing some pressure on HDFC Bank there. And in that entire debate of private and public sector banks, especially after the Q4 numbers, which one do you prefer?
If you look at calendar year 2025, most of our positions across our portfolios were largely in the NBFC segment and the public sector banks. So we didn't have as much of private sector bank exposure at that point of time. Over the last 6 to 8 months, we have built once again a private sector banking exposure. Clearly, some of the negatives that played out in the previous couple of quarters are no longer there. For example, we were seeing a series of interest rate cuts, so which impacted net interest margins, so more so for private sector banks as compared to public sector banks at that point of time. That no longer is going to impact in the same way. We do not expect interest rates to go down at this point of time. There are no asset quality issues at this point of time. Even if the disruption continues for a few more weeks, it's very unlikely that you will see any systemic issues in the banking and financial segment, and especially in the private banking segment. So that's also not a worry at this point of time. And of course, the valuations have corrected quite nicely. In fact, some of the expensive public sector banks may be trading at valuations which are similar to the most inexpensive private sector banks in that sense. So valuations have also kind of cooled off over the last several years. And credit growth expectations have been on the uptake. We have seen consistently month on month credit growth improving, and with nominal GDP looking to be slightly higher than where we were in terms of expectations a couple of months back, given that there is going to be a slight uptick in inflation. I think overall credit growth for the industry should also remain reasonably strong. So given all of this, we do believe that rest of financial year 27 and 28 should be much better for private sector banks. And hence, we have built our positions in that segment as well over the last couple of quarters.
And lastly, with regard to power, you said that there's a certain set of stocks which you believe seem to be slightly more overvalued. I know you can't talk stock specific, Harsha, but if you can give us the broad brush breakdown, what is it that you're liking? What is it that you're avoiding within that power ecosystem?
Clearly, it's not that we are avoiding any subsegment within the power segment. We do have power producers, we have transmission distribution companies. We also have capital goods companies, which are a part of the value chain. We do have cables and wires, which kind of cater to the increased power demand, etc. So we do have multiple subsegments within the power sector in our portfolios. All I wanted to say is that given the lack of options for the market in the times of conflict, especially in the last couple of months, this sector has done quite well. And also within the sector, there are a certain number of stocks which have probably started to go slightly ahead of their fundamentals in the very short term. It's not that their medium to long term growth trajectory is impacted or the valuations are so high that you need to be worried from a medium to long term perspective. But in the very short term, of course, some of these stocks have done exceedingly well. So to that extent, volatility cannot be ruled out.
Okay. Thank you so much, Harsha, for coming in and speaking to us. Short conversation, but material nonetheless. Thanks so much.